Today I want to talk about higher time frame perspectives relative to premium and discounts. Also, which also concerns how you would engage with the liquidities, because every single time we can do what? Know where the draw on liquidity is, or we can see the draw on liquidity, or we can see the liquidity pools. Sometimes we can see the liquidity pools, but when are we going to take it, or how are we going to trade towards the liquidity pool? So that is kind of what I'll address today on this day. So let's go into it. So we are starting from the 4 hours chart today, and we can see this is all-time high, and this is the low that was made during the November price action. So this is November 1st, November 3rd. This high was made November 3rd, and we dropped lower. So I don't want to talk too much about this, but I have to make a reference of it now because it's currently in this chart. So I have to do what? Reference it. So you know how ICT talk about the 20-day look back? This is what? November 3rd. This is the low of what? This is the low of November. November high, November low. See how the market did what? Gravitated back. Was doing a what? A 20-day look back. And you can see also all-time highs and the low. We came back into what? Optimal trade entry right here, OTE. And we began to see what? Price consolidates, and it kept on holding out. Wasn't willing to go all the way to all-time high, to clear all-time high. It kept on holding out, back and forth, until on this day, that was yesterday, on Thursday, we see sweep on liquidities here, ran all the way up. We failed to take this. ES took these highs. ES also took this high. So we created an SMT right here with ES. So giving us what? A smart money handshake. That what? Smart money now is about to step into the marketplace to do what? Allow us to engage in what? A higher time frame distribution lower. So let's go into this. We can look at it on the AS also. That is that November 3rd also here. Our price broke down aggressively, came back for our look backs. See how kept on making higher highs. We took out what? This high right here. And what do we see in today's price action? Heaviness. Look at how what the Nasdaq is. The ES is what? It's showing that light delivery. It's showing the delivery right here. That's what is unwilling. Why the Nasdaq is what? It's showing weakness right there. So Nasdaq is the best pair to look for shorts on, but you can see the weakness in the Nasdaq. It's not even willing to do what? Make those higher highs for the SMTs, right? Which is what we would like to see, and believe that what the smart money are what in this trade right here. So now taking that analysis, that intermarket analysis into what today's trading, what will you see? We saw that what price drops down at Asia. So price drops down during the Asia session, broke aggressively lower. Then during the pre-market, we came back. We were seeking for what? Premium. But on this day, We came very close to 50%, but price couldn't do what? Reach back into premium. It was showing that sign of what? Heaviness. It was so heavy it couldn't even get back to what? Premium on the daily range. You can see this is the daily high and this was the daily low before this retracement. So price was showing us what? Signs of weakness. And when we see signs of weakness right there, it shows us price is about to do what? Get real heavy. It's about to get real heavy. And we should be what? Looking for how we are going to participate in those moves. So now let's go into, look right here, we're on the 2-minute chart. So this was the high that was made when price was showing us that weakness. That was right here, this high. So when price was showing us the weakness that it wasn't willing to do what? Go all the way back into premium. So it began to break lower. Then exactly at 9:30, we see a reversal back to what? High, low. Came back to what? Optimal trade entry and a little bit above it. Then we are referencing a what? Algorithmic area, referencing this time-based liquidity pool right here. Then we did what? We broke down aggressively. If you take this high, you take this low, see how we came back into that range one more time. Continue, we broke down aggressively towards another what? Time-based liquidity pool. You can see that inefficiency right here. Stab into it, walked around that liquidity pool, then we sold off continually right there. So let's look at it on the 1-minute chart. Still the same thing. This is that range. 9:30 opens right here, ran all the way up. This was what? Manipulation, tricking everyone into what? Longs, because we are bearish. And if we want to see what? If we want to see, if we're looking for lower prices, we want to see that premium sell, not a discount sell. We want to see premium giving, offering that sell opportunity. So what the 9:30 did right here was what? To offer us premium sells at an algorithmic signature area, which is what? PM sell side liquidity right here. So I'll show you my executions. So during the pre-markets, I was thinking what? We're going to go all the way into what? The premium level, but I saw the Nasdaq wasn't willing to reach for the premium level, so I closed this. First I wanted to buy here, I closed it out. I said, you know what, let me just wait. Here again, I wanted to buy it into the premium area one more time, so I will just take a good shot of it, but it wasn't showing that sign. I told myself, you know what, let me just close it one more time. Then I took a long here. Price was moving in this direction, and I told myself, this isn't showing signs of what? Us wanting to reach forward premium. So I closed the trade at break even. Then I went short on this candle, because in my mind I'm looking at this as what? A market structure shift to me, because this low, high, taking out this high, look at this, a high, a low, a high, displacement below it was this market structure shift. Then what do we see? Retracement. That's your 2022 model right there. And if you take this high to this low, you see that's retrace back to 50%. And also see where this is the 9:30 opening price right here. This is the 9:30 opening price. See how the market was accumulating more short position around that area, and my target was the liquidity just below it right there. And we've later on sold off for over 400 points, but my target was already reached on my daily target. So yeah, and for those on the regular trading hours, we can see this same thing here. This is how you frame a continuation model on the regular trading hours. On the regular trading hours, when we see a liquidity pool get swept and we are in the middle of what? A higher time frame liquidity pool, which is our buy side liquidity pool and our sell side liquidity pool. And when we just swept a liquidity pool like this, when we see we're in between liquidity pools, the best thing is to do what? If we see what our opening range, this is where we begin to use our opening range gap right here on days like this, because when we see we have this is when the ICT rules even work for what? The opening range gap. When we have a 180 points plus opening range gap, when we have opening range gap of 180 points, we don't expect what? Price to continue to be what? Bullish. We expect a continuation of the already preceding price action before the 930, which is what? Bearish price action. So on days like this, when we have a large open range gap, this is really how to apply the open range gap. When we have a large open range gap, we swept a liquidity pool already. What we are looking for is what? A reference back to that what? Liquidity pool that was swept. Then after referencing that liquidity pool, we see a breakdown. That is exactly how you would see this repeats so many times. We rarely don't come back to reference it. Probably it is real heavy. I don't know, but 90% of the time we always come back to reference that liquidity pool that was taken out. After referencing it during the 930, we do what? We break aggressively lower. And you can see this play out here also. Look at how beautiful this is. Look at where the bodies are closing. Stab into it, reference it, sell off. Low, high, break lower, market structure shifts, sell off. Real beautiful right here. So I hope you guys find this insightful, and I'll see you guys on the next one. And I'm very sure this also would have given you guys a lot of perspective, because now if you want to trade the opening range gap, it's not just, oh, we have this particular amount of points in the opening range. Oh, now let's do this, let's do that. No, we don't start our analysis that way. We start from what? Hours price delivered. We start from hours price delivered. Okay, we've seen the what? The intermarket analysis right there. You've seen the intermarket analysis. You've seen this right here, showing signs of heaviness. Okay, that's the first thing, signs of heaviness. SMT right there. Look at how the open on Asia was. We have this large opening range, knew the opening gap already. So that's showing heaviness in the first place. We continued into the day, still with that same signs of heaviness. After failing to do what? Even come back into its new day opening gap. What do you see also happen again during the pre-market? This is the high of day, this is the low of day. We retrace back, we still fail to do what? Get back into the what? Into the premium of this range right here. Still showing more signs of heaviness. It breaks lower aggressively. That is literally when we should begin to do what? Look, now tell ourselves, okay, settlement price is all the way up here, and we open right here at the 930. We open right here at the 930. So this gap is over this amount of points. Now, since we have this large open range gap of 200 points, 180 points, I would like to see what? A continuation towards what? Sell side. Because of what? Everything is showing us weakness in the first place. We've seen that intermarket analysis, how what? Everything is showing weakness on the Nasdaq chart. We've seen it on the 5 minutes also, how price is failing to come back into a premium level. So that is signs of weakness also. Now at 930, we have this large open range gap. If we all remember how a fair value gap works, is literally how this open range gap just literally worked right now. This high and this low is just the same thing like this fair value gap that is here. This high and this low. See how price just literally came a little bit inside of this like an institutional order flow entry drill. Wasn't even willing to get back into what consequence encroachment of that fair value gap. That is exactly what this open range gap is acting at as right now, like a fair value gap that price is just doing what an institutional order flow entry drill into and selling off. That is exactly how you should look at the Nasdaq chart during the what open range. I don't have the picture here, but you can go into your chart and you'll see exactly the same thing I just said. Opening price and settlement price, we came back institutional order flow entry drill. Look at the opening range gap like a fair value gap right now, and you'll see institutional order flow entry drill, a continuation for sell off. Easy. And I hope you guys find this insightful. I'll see you on the next one. Be safe.